for the ride in a certain way. Now, we had a bit of a unique position here in the Middle East, that we had a stocks crisis in early 2006 that started in Saudi Arabia, which raised our own awareness about drawdown and crisis in the local markets, and we've taken a fairly cautious approach since then and analyzed and balanced our coverage based on it ahead of the game, not necessarily worldwide, but certainly regionally.
Esen, your feeling on this?
Yeah, I disagree with the question to some extent.
He disagrees with the question. That's okay. We're journalists. Okay, yeah.
Because, you know, I think you need to really question the role of media, whether media is best at calling a bubble or not. You know, I think the best thing media could do is focus on corporate governance and report the facts. You know, there are enough paid people out there to figure out whether things are a bubble or not. So, you know, we really have to step back a bit and think, what is the fundamental role of media?
So you feel the fundamental role of the media is not to uncover things?
No, not to, well, of course, to uncover, you know, as I said, the fundamental role of media, in my opinion, should be to focus on corporate governance. So transparency, conflict of interests, wrongdoings, and so forth. Media should not be calling things a bubble, right? They should not.
So what you're saying, yeah, Shirley is disagreeing here. Okay, Shirley, yeah.
I disagree. I think media also should give its own independent opinions on macroeconomic issues. As in Europe, if we focus on governance, it means no macroeconomic independence, no macroeconomic judgment.
Yeah, the thing is, as we just heard, things are getting very complex. Financial instruments and the world being all coupled together with a global economy and so forth. So don't expect, you know, it's really naive of us to expect journalists to really figure things out when, you know, top economists and top analysts have actually failed to call them. So, however, media should have, should have the responsibility of giving these guys a platform, everybody a platform, or the analysts who are doomsday analysts or who would have called the fault lines, as Professor Muhammad puts it.
But what you're suggesting is, and is that reporters, in a sense, shouldn't be able to anticipate bubbles. Now, in all fairness, Alan Greenspan didn't get it himself, right? In terms of the bubble, and a lot of other people did. Right. But Martha, you're raising your hands. I think you have a fundamental disagreement with Esen saying here.
I do. I think that reporters can see danger signs and tell their readers and investors about the danger signs. If things are going for a long time in only one direction, for instance, if housing prices are only going up, you know from your training and background that that's going to change at some point, and a lot of people are going to get clobbered by the change.
Stephen, your thoughts on this? Yeah.
I agree with Martha. That's absolutely true, and I agree and disagree with Esen on this. That as journalists we have a role, we have a watchdog role, but not a prophet's role.
Okay. Yeah, Mohammed, you want to say something about this? Because a lot of economists missed it as well.
Yes, this crisis is not simply cyclical. If it is purely cyclical, then I think you can see the formation of bubbles and bursting of bubbles quite visible to a man in the street and so on and so forth, even journalists especially. But this crisis is a structural crisis. It's partly structural, partly cyclical, and therefore it's not that visible to journalists, even to the economists. It took some time to come to terms with it.
But wait, I'm sorry, Martha, go ahead. Yeah.
It was not just cyclical, but there were some other things that were going on that journalists could have written more about. We knew that there was excess liquidity in the world, and these, what turned out to be toxic assets, these instruments, were being designed to absorb that liquidity.
But why didn't they? And I realize what you said in your opening remarks, all right? But on the other hand, you were there. You had a real estate department. Why didn't you walk down to the real estate department and say, I just got back from the Bond Market Association, and man, there's a lot of talk about these new financial instruments, which are very complex. I think I know more, but you didn't act on that, and you're a great journalist. Why?
I didn't act on it for a couple of reasons. One, we divide ourselves into different subject areas, and we're not good enough about crossing the boundaries and talking to people who are covering other subject areas. And I also didn't do it because At that point, after I talked to the Bond Market Association, I had what would have been a highly speculative story saying there were these complicated new instruments out there and they might be risky. And it's really hard to get good play for a story that's speculative. The other reason is I immediately got back and had to turn my attention to other stories.
I think that's a very good point you make because, Mohammed, you want to make a point here? Yeah.
Let us be fair about it. Even experts were not sure. Even the regulators were not absolutely sure of what is going on. For example, the AIG, got a triple rating, and there are many other institutions, which were Basel compliant even on the day it fell off the cliff. So how can it be seen by journalists the way that you expect them to see it? Because I'm an economist by training, and I think we had difficulties in reading the situations ourselves. And journalism to me is basically reporting, the message that comes out of serious analysis.
Shuli, do you agree with this? Because Shuli's publication, you have 120 people working for you, correct? And about a third of those people on her staff, a third, at a time when investigative journalism is dying, a third of those people are focused on investigative journalism. You broke the tainted milk scandal. I just want to point this out in China, which was a huge story, and it's not to divert, but your feeling on this in terms of the media's probing.
Yeah, I think, there's 2 points I want to say. One is the editorial policy we have chosen. I think from the day one, we know the test for business media was that should we write for business or write about business? And we chose the latter, and we stuck to it. Our readers open our magazine or click our website. They know what they expect to was not they want to know, but what they should know. I think that is a very very basic principle for the integrity of business media.
How many of you agree that the definition of business journalism is what they should know? Raise your hands. Okay. How many of you disagree with that? Okay. There are a few people out there, but I see you raising, do you have a disagreement with what she said? It's what you should know.
Well, that's very, very subjective at the end of the day. I mean, if you call things the wrong way, you would have been criticized by investors for, basically making the wrong call as well. So it's totally subjective. Right?
Stephen, your thoughts on this? Yeah.
You and I keep half agreeing and half disagreeing. And there is a balance to be struck between our obligations. I mean, we have advertisers, sponsors, shareholders. We also have the public that trusts us and listens to us and pays attention and expect honest and genuine reporting and analysis of what we do. I'm not sure. I'd actually like to know how much latitude you have in China. I mean, how far you can push where the envelope is, because we certainly have an envelope here that we push against in terms of openness, which is a two-way street to the flow of information. What I think you were suggesting, Shuli, is that you're not encumbered with your business.
Because in China, the situation can be very challenging. And we pay a lot of attention, as just Todd mentioned, we use at least 1/3 of our editorial staff to work on investigative reports. We try to find what is happening behind the curtain of China's nascent financial market. And still, problem-ridden regulatory regime is really evolving. And when we will try to make a significant contribution is by watching out for the unscrupulous market players. We pay a lot of attention on watch out for dangers of funny information, misleading rumors, insider trading, and various tricks aimed to luring investors into money-losing schemes. And we think the most dangerous thing for China is going to the track of crony capitalism. That means big business colluded with government officials. And we are very aware of that and pay pay our eyes on that. That is